Well, good morning, everyone. It's Friday, August 30th. Tomorrow's the last day of the month, and then officially, well, not officially, I think summer's not officially over yet, but it sure feels like it. We got a major storm coming into Florida over the week, actually beginning of next week, so everyone's preparing. We're still deciding whether we're going to stay or go. By tonight, we'll figure it out. It's actually our first storm here in Florida because we moved here from Los Angeles a little over a year ago, and we haven't experienced a big one. And Murphy's Law, right? First, like, there's supposed to be the biggest storm in 30 years. Anyway, we'll get through it. Want to know how you guys are doing. If you guys are in Florida, please reach out to me. Want to make sure you guys are okay. You can send me an email, support@marketgeeks.com. I want to make sure all of my readers are good. Now, let's talk about market action. This is very interesting. This is the first time I've seen this posted. I've been talking about this little paragraph here for about 2 to 3 months now, almost daily, in our bootcamp sessions and in our PPVIP program. Some analysts say Beijing might be waiting for President Donald Trump re-election campaign in hope he feels pressure to strike a deal. Now, I believe that's 100% what they're doing, and here's the problem with that. Trump has a very strong vested interest in keeping the economy strong. I believe one of his biggest tickets to getting reelected is a strong stock market. So he has a very, very strong interest in negotiating with China or resolving this trade war before the elections. And I believe that's going to start pressuring him. And that time is now. So it's interesting, though. I wanted to point this out to you because till today, I have not seen this posted in the paper at times. So if the public is talking about it, obviously Trump is now feeling this, and this is going to get really interesting right now because Trump has a very strong interest in getting reelected, and he knows he's not a stupid guy. He knows that the stock market, waving the 52-week high and the stock market super strong since I've been president, is a really good way to help get reelected. Now, let's focus back on the overall stock market. What we're seeing is this is the SPY. The SPY is stronger because, again, there's talk that China and U.S. may work things out next month. Again, it's all speculation. No one's sitting at the table negotiating anything, but the stock market likes to price things in. This is real-time data. Now, this is tonight. This is the overnight market still. It looks like we're going to open a little higher than the 50-day line. That's the 50-day line. Now, this is very important, and I want you guys to pay attention. Do not believe the market is bullish till we're trading completely above the 50-day line, for 2 sessions. Because a lot of times what happens is we'll trade above the 50-day line like here or here, and then we'll move right back. Now, right now, there's a really good chance, about 85 to 90% chance that the Fed will lower rates next month. The problem is, if they lower rates, but nothing happens with China, there's no positive negotiations, there's nothing moving forward, I don't think it's going to push the market much higher. And I'll tell you why I'm thinking that. This is the percentage of stocks above the 200-day moving average in the overall stock market right now. Right now, only 43% of stocks in the overall stock market are trading above the 200-day moving average. That means the stocks in the S&P 500, those really big large cap stocks, they're overvalued in comparison to the broad market. So you have maybe 20, 30 stocks trading really, really strong, and they have a large market cap. But the overall stock market, about 3,000, 4,000 stocks, they're not doing well. They're still below the 200-day moving average. And I don't feel comfortable going long the stock market or any stock unless it's a defensive stock like utilities or consumer staples. I don't feel going long till I see the overall market above the 200-day moving average, and we're just not there yet. So again, the 200-day, watch your eye, keep your eye out on the overall market or the New York Stock Exchange. The New York Stock Exchange is a really good barometer right now for where the overall market is, and it's not bullish. It's just slightly above the 200-day moving average, but this is the sentiment. This shows us percentage of stocks, not by market cap, which is why I like to see it. And right now, if you're looking at stocks, at the percentage of stocks, 58% of stocks in the overall stock market are trading below the 200-day moving average. So till I see 2 days clearly above the S&P 500, the SPY above the 50-day line, or till I see the percentage of stocks in the overall market above the 200-day moving average for at least 2-3 days, I'm just not buying this rally. And I would rather sit tight and wait for a confirmation to go long right now. Therefore, we're still in choppy mode. If you're going to go long, stay with defensive stocks like consumer staples and utilities. I'll talk to you guys later. Have a wonderful weekend.